People are no longer looking to sell off their Bitcoin as soon as anything, hairy happens in the market, whereas in the past they would have.
We have two pretty big things coming up. We have a lot of the jobs growth and inflation data coming up all at once next week, so that's going to have some impact on what happens next. We also have in the US equity front, obviously there's been quite a bit of damage there, like you talked about.
With this new trade war between the US and China, we've seen Bitcoin dip about 12% on average. It's come up now. And then the S&P is like 13%.
Hey guys, welcome to this week's Tapping Into Crypto with me, lovely Ted. So how are you? Why are you laughing?
That was Pav's third go at the intro, and it was okay. It was okay.
No good? Go again?
No, it was good. I liked it. Let's stick with it.
Look, I'll just throw it back to you. How's those Broncos?
Inconsistent, mate. Inconsistent.
Yeah, a bit like your attitude,
Yeah, well, mate, with this market, you can probably understand. Same with the Lions.
That was terrible. What the hell was that?
Or their winning streak came to an end, so no good for the Brizzy-based teams.
I guess they could only go losing the first two quarters for so long before.
That's true. That's true. We had a ripper start to the season. But hey, is it maybe a strong indicator that the market's a bit boring that we've started off the episode talking about the Broncos and the Lions?
We always do this.
I mean, we haven't done it for a while, but I guess...
true. Actually, it is a nice little litmus test.
Yeah, I guess, I don't know, we're hoping for more in the markets, but we do have a pretty interesting angle to approach the episode with today. So I
think some good insights by the time we get to the end of this.
I think so. So we'll do a bit of a summary. We're going to touch on how the market is potentially thawing at the moment, and where it could lead into in the next couple of months. What else? Looking at the supply of money and how that correlates to the price of Bitcoin, and why that's looking somewhat bullish at the moment. Mm-hmm. You've got some other supporting tailwinds for the crypto market.
Yeah, a couple of fast facts I think everyone should know.
Yep, absolutely. We said last week that we'll give an update on Mantra OM because that tanked over 90% last week, and we didn't really have a whole lot of info to go off. So going to give a bit of an update on that, and then just some general altcoin news, I think.
Let's get stuck in. Do you want to kick it off, Ted?
Yeah, I mean... As I said, I think the market is thawing at the moment.
Boring or boring?
Thawing.
Okay,
a little bit boring, but that's okay. It can't always be exciting.
Yeah.
But look, we've seen Bitcoin dominance head to new all-time highs. It's at the highest it's been since 2021 December, which is the last bull market, right? It's at about 64.5%, which is, if you just see it on a chart, it's like trending upwards and upwards and upwards. So. I guess from a Bitcoin point of view, that's good. Typically when we see an altcoin season, that would need to come below 60%. And so when that happens, you might say, okay, we're in an altcoin season. But for the time being, that's heading...
it's all the Bitcoin show, right?
Yeah, exactly. Everyone's focused on Bitcoin. But look, an interesting thing that we touched on a little bit last week, but I kind of want to highlight again, is Bitcoin's acting like an asset that wants to go higher. It's just sort of waiting around to see what the macro does, right?
Yeah.
Which of course we've touched on to death, which we won't really do today, but of course that's to do with tariffs, Trump, trade wars, whatever may have it. But look, I think this is a sign of maturity. Like back in 2022, we would remember, the market was absolutely taking a dive, and I think the S&P 500, which is a stock index in the US, that dipped like 23%, something like that. Bitcoin at the same time fell 58%. All over double the amount of the stock market index. Now, with this new trade war between the US and China, we've seen Bitcoin dip about 12% on average. It's come up now, and then the S&P is like 13%. So that's just crazy to show how much it's matured in such a short amount of time. And obviously, we've seen things like ETFs, the strategic reserve that has helped that.
Yep.
But I think it also goes to show that it's no longer that risk asset that it once was. Like crypto, yes, you could definitely make that case for, but Bitcoin in itself is, I think people are considering it like a hedge against inflation, similar to what we see with gold, where when the markets are looking a bit hairy, people flood to gold, right? And that just goes to show Bitcoin is outperforming the stock market. We've never really seen that before, which is a bullish case for Bitcoin as a whole.
Can I be that person that disagrees?
No. Moving on. No, of course.
I still think it's a risk asset, but the one thing that it's got going for it is that it's not tied to like any sovereign risk. So like monetary policy, like no government's going to change or impact Bitcoin greatly. So in that way, I think it's similar to gold in the sense that it's a global asset, but I would still say it's in the risk on department.
Of course, and it probably will be for a few years, but I think it's heading in a direction. Like, just look at the numbers: 58% versus 12%.
If everyone keeps doing what Sailor's doing, and yet countries doing the same thing, they're just holding, not selling. Big time. Like a complete shift.
Like people are no longer looking to sell off their Bitcoin as soon as anything, hairy happens in the market. Whereas in the past they would have. Still probably happening with altcoins.
Like you famously quoted that as lettuce hands in the office, I think.
Lettuce hands. I don't know if I can claim that, but I did bring it to the forefront of this podcast, so I'll take it. But look, all good things in that direction.
Yeah.
But let's talk money supply. So. I think I'll kick us off a little bit. So I think the thesis for us is as long as central banks continue to expand like monetary supply, then that's a good thing for Bitcoin, and Bitcoin price will head in the right direction. And right now we're seeing, global money supply, which is measured as M2. That chart is just, trending higher and higher and setting record highs, and showing no signs of slowing down that acceleration, right?
Yep.
Bitcoin has in the past mirrored that because obviously more money in the economy, more money for people to spend, like they're going to spend that on things like Bitcoin. Obviously, like not just Bitcoin, people are more likely to spend and go to restaurants and things like that, and in a booming economy. But Bitcoin traditionally sees like a pump off the back of that. So whilst like Bitcoin is pretty stable at the moment, we're seeing that M2 heading in the right direction or heading upwards, which means Bitcoin will likely mirror it soon. If, of course, the concerns around tariffs and all that subside.
Yeah, there's just that headline risk. Like, I think if you look into the data, it's like a 90-day, 84-day lag. So what that means is, as more currencies get flooded into the markets, usually within that circa 90-day period, you start to see that sort of push Bitcoin a little bit higher as well. So it's just a correlation analysis. It's not like one predicts the other. It's just from a data perspective, that's what we have seen as an average movement. But I think, to your point, confidence is absolutely rocked and shocked. Like even fund managers, they're completely gone into sort of defensive modes. It is unfortunately that top 80% that, will move the market in any given circumstance. So if everyone in that regard is, as much as we're buying Bitcoin, you kind of need the people with the biggest wallets or purses to start buying, and we're just not seeing that right now. But when that sort of does subside, we start to see some confidence return to the market big time. Like the fuel's there. It's pretty exciting, I think.
Yeah, I think it's on a platform right now and it's ready to be launched. But obviously we need a more favorable global setting for that to happen.
100%.
Which, isn't guaranteed to happen. So just keep that in mind. Like anything could happen with, the powers that be.
It is. But then you got to, I think I'd like to, point to, I guess, some of the facts that we know that are happening right now. Like as much as we're seeing, the US does control the narrative. Like case closed. Like that's just what it is.
Elbow.
Huh?
Not elbow.
Sorry, Aldo. But, we did see Europe again drop their interest rates for a 7th time last week. We've seen on the macro front, inflation headline metrics last week also, or 2 weeks ago it was now, come in lower than expected. No one's talking about it. A month or two ago, headlines around inflation were actually driving a bit of fear in the market that they were creeping up. So now the opposite's happened. No one's talking about it. So again, it's like once you have this headline risk removed and all these other stats that they haven't gone anywhere, those trends are still there of like the economies are looking like, hey, we need to start stimulating and growing. That's going to start to take over the narrative. And I think now's a very important time to just be paying attention, to be honest. And this week, not so much is not a massive week for macro news, but the next week, we have 2 pretty big things coming up on my radar. Number one, we have a lot of the jobs growth and inflation data coming out all at once next week. So that's going to have some impact on what happens next. We also have in the US equity front, obviously there's been quite a bit of damage there, like you talked about before, Ted. The companies in the S&P, for example, when they go into earnings season, which we're just about to come out of, there's an embargo on them being able to buy back their own stock. That lifts a week after earnings. So different companies are different timing for their earning reports. But as we head into the end of this month, all those companies can go back to basically having that blackout removed, and they can go and buy their own stock again. And that might be more attractive for them. Number one, they want to prop their prices up a little bit. Number two, the market's at some severe discounts if we look at it holistically and zoom out for a sec. And we are just seeing just a general flight out of the US dollar. So there is currency weakness there as well. So I think it's going to be very, very interesting 2 weeks. And it's going to be interesting to see how we go into next month. I think it could surprise a few people, particularly just to finish off, like we know as much as we don't want to say the T word, tariffs. And we were talking about this last week. What if we start seeing deals? So that's like the next big word that comes out. And I think if we think about even just human psychology, the first time we saw tariffs really hit the markets, massive volatility, huge move to the downside. You got to think that when we see the first material results and deals and, solid, looks like it's going to be over soon. That's going to have a huge volatile impact in the other direction. Like it just makes sense from a logic and human nature perspective. And that particularly comes out when you look at the data now. Sorry, I'll finish after this.
No.
You look at the data now, the positioning is very defensive. So you can look at like option markets, even in like the stock market. They're hedging for as much defensive downside as they can right now. So to the point where you could argue they're overexposed to downside and they're not really positioned for as much upside. So that's all I sort of would finish with is like, if we're trying to understand where we are right now, I feel like everyone's planning for the worst case scenario, and this is what it looks like. So as soon as like the good news starts flowing, you're going to see that unwind, and that could be very volatile.
Okay, you said a lot just then.
Yeah.
Let's try and break that down a little bit. So let's start with the inflation thing you talked about, because I know there's been some talk about, you mentioned Europe reducing interest rates. Are we likely to see the same in the US? I know Trump has called for Jerome Powell to do it.
Yeah, it's interesting. He wants to fire him.
Yeah, which you can't. But no Trump talk today. But are we likely to see that? Like, when is the next sort of outcome for that?
The meeting is in May. Split opinions. Like, yes, it's coming by the end of the year, 100%. But a lot of people are saying that May's probably too soon and it might have to stretch out. But again, we go back to this whole noise in the market right now. If something breaks on one of those data points that are coming out in the next 2 weeks, so let's say jobs, we've got jobs in 2 weeks' time.
Yeah.
If that lands worse than expected, so there's very like stagnant job growth, that's going to force the hand for the Fed to have to step in and probably do a cut. Maybe. If it's not that, they might do some other event, like a tapering of quantitative tightening or QT. I think we've talked about that as well in the past. So if all of a sudden they stop all those QT measures, that's bullish. Like, that's a form of easing, not in the form of interest rate cuts, but in some other way, shape, or form.
And I want to touch on the equities buyback thing Is that happening at the end of April?
It'll happen at different times for different companies as their earnings reports come out. But I believe from the 25th, majority will have come off that that blackout period.
Okay.
But it continues until the end of the month.
Okay. And what, like in the past, what have we seen from that? Have we seen any particular companies like buying up big? Would they see that more as an opportunity now, given the market's at a discount, as you mentioned?
Well, that's the difference. In the past, I think if you look back at the data, it's mixed. But circumstantially, if you look at where we are now, it could have a bigger impact because there might be a higher risk to holding dollars if the US dollar is going to continue to slide off.
Yeah. And so from a crypto perspective, if we see buyback of equities, that might drive their price higher, which has a little bit of a correlation with the crypto market.
Biggest thing is I think it'll just bring back consumer confidence.
Okay.
And right now, there's just a confidence shock. Yeah. So it just adds to the story. Like, again, there's not one lever that's going to move everything. But if we start to see, again, like tariff news start to be less impactful, deals come to the table, equities markets recovering or showing signs of recovery, it just puts everyone's foot more comfortably on the accelerator is my thesis. So that's all I'm sort of looking for. Just a general turn the boat moment is hopefully what we're coming into in the next couple of weeks.
Okay, but it all sounds like things are lining up in the right direction. It's not like uber bullish, but things are like starting to head in the right direction. As you said, the boat analogy.
Yeah.
Is there anything that's concerning right now, apart from the T word?
Well, I saw I'm going to have to do a T word for you, but I think this plays into everything because you think about the kind of person he probably is. Trump's approval ratings apparently dropped to its lowest, 42% since returning to the White House. So I saw that. I think at the same time, as much as, he wants to sort of bash on the doors of different nations to get deals, he's going to also be answerable to, obviously, all this disapproval in this against him at the moment. I wonder if that sort of plays into some of his other plans that he might have. Maybe brings back that impeachment issue that he's had in the past as well. So maybe they're things that he just doesn't want himself as his own headline risk. So
it's interesting because for a long time he was actually growing in the approval rate, and I guess this tariff thing has just sent that tumbling, because he was at 54% or something like that, which was the strongest he'd ever been, even in his previous term, but now that's come tumbling down. So, and he cares about those things, right?
I reckon he would, as much as we don't hear about it.
But even more so, he cares about the stock market. Like, he's a businessman himself. He referenced the Dow Jones all the time in his last term. Like, he's going to look at that and be like, I need to fix this because this is something he's big on. Because that's an indicator of the economy as a whole, right?
Yes. Yeah, I agree with that.
Okay.
But deals is what we want to hear.
Okay.
Deals, baby.
Deals. We should make a deal right now to move on.
Yeah, okay.
So, Mantra. We touched on it last week. That actually happened on the day that we recorded with Matt from Collective Shift. So we didn't really have anything. Unfortunately, there's not a heap right now. Like, there's a lot of pointing fingers. But to recap, their Mantra OM is the token, dropped over 90% in like overnight, essentially in 24 hours. And everyone was freaking out because it was a top 30 token. It's like shades of what was it? Terra Luna from the last cycle. And everyone was saying, it was a rug pull. You know, the owners had so much of the supply and then just, Matt wanted to cash in. But look, BitGet's CEO, so BitGet's a big exchange in Asia, she came out and blamed the drop on poor token concentration. So that's what we're talking about. Like, it's more concentrated by the owners of the token rather than like a huge decentralized network community. Poor governance, and also like mass liquidation. So I guess a bit vague there as well. But Mantra's CEO has denied any insider selling, and he's even proposed burning the team's token to win back community support and trust.
What do you think of that?
Well, I mentioned that to you before, and you mentioned, the tokens would already be sold off. And I'm like, well, maybe in this case they're not fully, because if there's tokens to burn and they can prove that means like they didn't sell all their supply, right? But there's so much uncertainty in the air. But it looks like I can't see this coming back to its levels it was. Like, the community there's still a lot of distrust in the community. No one's really convinced. Everyone's still convinced it's a rug pull. Like, even the CEO is getting a lot of hate for that. So I think in these situations, we saw it with Terra, that never came back.
Everyone thought it would, but I think is a similarity, right? Like, I don't remember, did you sort of feel the same, that everyone thought it was going to come back?
I don't know if I ever thought Terra Luna would come back. I know they made all these like plans to recover it, moving to like the new Terra chain and like
reissuing
the tokens. But like at that point, no one wants to touch it, right? Because it's such a high risk, and like a lot of people would just think, okay, crypto's already risky enough for me. I don't want to touch something that has such a bad reputation. So I think in this case, unless there's a miracle, it's probably going to be the same thing.
No, agreed.
But look, any altcoins you're looking at the moment? I know we said the focus is all on Bitcoin at the moment, Bitcoin dominance, but altcoins?
100%. I think now is still the time to be doing your research, so you know what your shopping list is when you feel like the time is right for you. For me personally, still DCAing into Bitcoin, but I am looking at swing trade opportunities. There were some nice ones, I'm going to say it, on Fartcoin.
Nice.
Nice. Yeah. It's actually up 95%. In the last 30 days when we pair that against Bitcoin. So, if you talk about Bitcoin dominance, there are some altcoins that can still outperform Bitcoin. You just got to do your research and find out what they are. It's just a little bit more hit and miss. But we've seen that and AI really start to shine. So we got Render, Tau, and FET back in the fray. And so my sort of eyes are still looking at meme coins, AI. To be honest, like the market's telling us that that's where it's seeing a rotation for strength. So I'll be looking at it. Yes, particularly the more blue chip Solana meme coins are kind of on my watch list, and Dogecoin, to be honest, just with the ETF decision coming in May. That's definitely on top of the list. And then the one infrastructure play that I'm seeing is Hyperliquid or Hype, as we spoke about last week as well, seems to be catching a bit as well, whereas some other ones are kind of flailing a little bit. So
it definitely does. Hey, it's constantly in that top movers list. Seems to be gaining more and more attention. Which is obviously huge in a altcoin market that has millions of coins. But yeah, one to watch for sure. I think from my point of view, like I have definitely got my eye on Hype. At the moment, I'm just dollar cost averaging into your Bitcoin, Solana, and Sui. They're my three biggest holdings. But I'm definitely eyeing off Hype and potentially looking to add to my portfolio at some stage. But yeah, just looking for a little bit more clarity in the market right now and a little bit less uncertainty around tariffs and some of that global concerns with trade wars and things. So
I am interestingly getting targeted by Sui for ads right now.
Interesting.
Are you getting any?
No, I'm just getting targeted by Greens ads.
Greens ads.
So I don't know what that says, but Sui ads. No, I haven't got any in the past. But we actually released a Sui report on Swyftx Learn, so we might link that in the show notes. But what we're looking at, we're just giving a bit of an update on where that sits. As with all the market, in terms of daily active addresses and use of the chain as a whole, that's sort of trending downwards. But that's you can compare that to the whole market. It does have some exciting upgrades, which we discuss in the report. So make sure to go check it out. But for me, it's got all the strong fundamentals still there. And I think in a bull market, like some of those alternative chains to ETH and Solana are going to absolutely fly, and Sui in this particular case is the one I'm most bullish on, which is no surprise to our long-term listeners. But Pav, any other thoughts?
No, just everyone hang in tight is kind of like my key takeaway right now. When everyone's not talking and looking at stuff, kind of just prick your ears up a little bit. But yeah, I still think this headline risk is the biggest risk we have right now. Once it clears, expect the unexpected. I know that's pretty cliche, but this feels like a pretty good time to be watching.
I want to provide a little analogy before we go. In the Narnia, the movie?
Haven't seen it, no.
Oh, who is this guy? Anyway, like as Aslan, the Lion King comes back. That's not the Lion King.
Not related. The Lion King?
Yeah, but he is a king who is a lion.
Okay.
All the ice starts to melt and everyone's like getting excited and everyone's excited about Aslan's return. I'm starting to, see that a little bit. Bitcoin is starting to return a little bit and the ice is starting to melt.
What happens when Aslan returns?
He takes down the Ice Witch or the Ice Queen.
Okay. Is Donald Trump the Ice Witch?
I didn't actually get that far when I was thinking about it, but look, it's there. So please feel free to critique me on my terrible analogy, but it's what I've got for now.
That's fine. It's good.
Yeah, a little bit of pop culture.
We love it. I got nothing for pop culture.
Yeah, Pav just watches the markets and nothing else.
Yeah, I get that all the time. Let's wrap it. Put a bow on it.
Yeah,
you happy with that?
Let's do it. Wrap it up.
All right. Thanks for watching, guys. We'll be back again next week to unpack everything crypto. But until then,